The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Wednesday, the 19th of April. We're looking at the Dow. Whoops, I got this is natural gas down 12 cents at 2.23. Had a really strong up move. Remember, if you compare it to the move that was made back in February, where it went from 220, around about 225 or so, up to almost 319, 318, and then made this single leg A to the upside failure pattern, and then came tumbling down. I said that in this particular instance, the MACD is good. Stochastic still quite weak at 69%. I do not want to see a sharp pullback here unless it is followed almost immediately. In other words, within 2 days, you've got to be, this is a continuous contract, let me just give you this, 2.385, yesterday 2.383. So far, this could become a peak A, but you want to see a B almost immediately. And if this can get to 243 by today's Wednesday, by Friday, I'd say that's the first time that I've seen decent follow through, and it could extend even further. Otherwise, be careful. I mean, there's something wrong with this contract for sure. All right, another thing to look at here is I always talk about, in my webinars, invariably, and I've got archived a whole chunk of webinars, I talk about the long, narrow rectangle. Let me see if I can do this right now. That's not that one. That is this one here. Where is it? There it is. Right there. So the long, narrow rectangle says you keep thinking that it's going to break to the upside. Instead, it's like a little ping pong ball inside a plastic tube that you can see, and it keeps going to the top, and then instead of breaking out, it comes down to the bottom. You think it's going to break down, and then it goes back up again, then it goes out, and it does that over and over until it makes a low and starts to make a peak A, a B, a C, and finally a D, preferably just a tad outside the rectangle. Then the big test is if there's a midpoint, a mid-channel trend line, in other words, a horizontal channel from the border on the upside to the downside in the middle. If on that pullback after that peak D, it holds that steadily and then breaks out to the upside, that says, whew, now it can be a decent break to the upside. But if it holds and then goes down under that trend line, it's going to not only take out the left side low where that little trough was made to make that horizontal line, it could take it out and then try to revisit. So let's see where we are. There we are. So this is I didn't even draw it in, I didn't have time. This would have been the midpoint line right here. Let's just go there and draw across somewhere over there, right? And when it came down this time, it went to the line and held the 9 period over the 14 period. Now it's trying to break to the upside. That's one of the reasons why I've said to subscribers, this has to be a process. Yes, we've gotten to the leg E in the daily Dow. A leg D and then a peak D. But the technicals are so strong. Look. The technicals, and when I say technicals, I mean the 9 period over the 14, the 9-14 crossover. The price is above the 9. The 9 is above the 14. Let me point to it. Here's the daily chart. There's the Dow price, daily price right now, down 110 at 33,864. There's the 9 period moving average. Let me just click on it so I can give you the exact price. At 33,750s. Here's the 14 period moving way under at 33,581. Here's this trend line that I've used for so long at 33,580 into the other rectangle that we were looking at way back in February when it broke down and came back up, and now this becomes a really important trend line. All of the moving averages that we've discussed are above the 200 period moving and 50 period moving average. The MACD is starting to flatten for the first time, but it's still very strong. The stochastic's up at 92%. I love that, flat at that point, the on-balance volume made a little triple top, so you've got this little digestive phase. It says at peak D, you've got to be careful because other things can happen. Your objective in the Chapman wave is to get you. Let me show you this for new people listening or new subscribers. Let me just get to this if I can't find it. There it is. Rectangle. So here it is. You try to identify the lowest low bar, use other techniques, and then you want to count each successively higher peak A, then peak B, peak C, peak D. At peak D, other things can happen. You could still go to E, F, and G, especially if within 3 bars, if it makes a new leg E. This has not done that yet. So we're looking at this is a really important session. And this is where other things can happen. And you can see on the left side, look at that peak D at 34,331 on the 14th of February. Whoosh, 31,429 was the low a month later on the 15th of March. So this is really important. And why is it important? Because the weekly chart is so close to pushing above. If I'd like to say this week, maybe it's just a little too short to say this week, but if by next week, let's give it all the way through next week, we start to trade in the 34,300s. It means we're out of this Chapman wave inside track repellent zone. It becomes a propellant zone. All of a sudden, the inside wedge target resistance line of, what will be next week or this week or next week, of 34,250 becomes a target. So, and the same thing in the monthly chart. There's the monthly. We still got another week and something to go how long do we have? 2 weeks. Today's the 19th. A week. It'll be the rest of this week and all of next week, and that's going to be very interesting because here we are on the cusp of pulling back. If the technicals, as they were on the 14th of February, were really weaker than they were in the previous side, was also peak D. I'd say, this is the time to grab the short position. But I've got a strategy here for subscribers that we're trying to think of this as a process. When it goes to this big D here, and it doesn't immediately break within 2 days to the upside to tackle leg E, but it hasn't broken down to even at this point, we still haven't made a trough yet, maybe today. No, we haven't made a trough. And that means that it's a process of coming back down. So if it's going to do that, I'd say that 33,600 to 33,500 will be key support over the next 3 to 6 days. All right, just making it as simple as possible. Now I'm going to go quickly through the S&P because the S&P has almost the same structure, except it made an F, a peak F, and this is, wow, peak F, but the 9 is over the 14, 14 is way over the 50, the 50 is way over the 200-period moving average. The MACD is good. The stochastics at 91%. On-balance volume is a little overbought, but still very good. It's, as I said, it's a process. And look, a cup formation in the weekly chart. I put the left side to measure this when we finally make some kind of a peak here. Are the technicals still strong? Well, they are pretty strong in the weekly chart. I just cannot, and look, for the first time, just time alone will get you out of this trend line in the monthly chart. But this is the first time that we're actually tackling a new resistance level in the monthly chart of the S&P. I have to tell you something. I still like what I'm seeing. I'll be back in a moment. Basil, Chapter, Tiger conditions, our Dow's down 100. Now, 13. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, so look, we've got the S&P, we've got the QQQ, also the same thing. So it made, look at the measurement now. This is a little different. You see this left side chart, that's the daily chart. If you go to the high that was made, I should have put the dates in. I should have just typed it in. It would have been done already. I'll do it right now. So if you look at the April, I think it was the 2nd or so, but I'll get there in a minute. Here we go. If you look at, there it is, the 4th of April at 321.63. 321.63. I may as well put 4.23. So if you look at that high, and the high that just missed making a new recovery high at E, it went to 321.42. So it was 22 cents from hitting at 23 cents from making a new high. Look, the MACD is much weaker. The stochastic is much weaker, under 80%. On balance, the volume is much weaker. Relative strength starts to slip. That's a little gray line that you can see there. And if you're looking at the 9 is still over the 14. So even here in the QQQ, you can't say, oh, fabulous, big short position right now, because there's still internal strength. It's a process when you have such good strength. With the 9 over the 14, you just saw that here. Let me go back to the E-mini. You just saw that look, for 1 bar, 2 bars, no, it was just 1 bar in this congestion, the sideways congestion rectangle, long rectangle formation, making a cup formation from a trough to peak. ABCD, just over the previous peak, D high, pulls back, breaks under the midpoint, but doesn't go further. It goes right back up. And now it's walking. So there was just one day where 1 minute where the 9-period moving average went negative, and now it is back. No, wait, it didn't even do that. It's a red candle. So it's been since right there. Oh my, I didn't even see that. Since 9:26 this morning at 41.58 in the E-mini, the 9-period moving average has been green, and it's still green. and it's still showing some strength. And that's the power. Look, if I went by the MACD, went very poorly down, but the price held. The stochastic went much lower, the price held. This is an incredible technique. That's what I teach all the time, and that's what helps us stay in positions much longer than normal, because if I use this, I've got a good benchmark. And look, the 10-minute period moving average has crossed positive, and it's in a leg C, and it's still good. And the MACD is good, stochastics 89%. That's just saying, even with all the talk of the selling that's going on, it's held very well. Okay, enough with that. Let's just get back to the story here. And the story is that the QQQs show weakness in price, but the daily has held technically, and the weekly is still very strong. Monthly chart, month has still got quite a bit to go, but we have gone above. The monthly chart is 321.17 was the high in March, and 321.63. Not by much, but it has continued the leg A to the upside. Now, a bunch of questions came in. I'm going to get to them, but just let me first say crude oil is pulling back. And I think it's pulling back in a way that says we could start to fill the gap. We could go to the 77 area if this weakness continues, and I think it will. If we're looking at the TLT, we spoke about that. A rectangle formation can last a lot longer than your patience. Look at this rectangle since November. Was it December or November? I think it was December. Yeah, the week of the 9th. The high was 109.68 in the TLT, the iShares Treasury Bond, 20-year Treasury Bond ETF, and the low is in the 99s. And here it is, stuck in the range. And I had a caller, I can't remember what I typed. I said, let's look at this again around about here. When is that? That's in May. And see whether it's still stuck in the range. Home on the range. All right, so what we've got now is we've done all those things. I want to look high-grade copper. High-grade copper is, it's pulled back. It's back on that downtrend line. Looking at the silver, silver actually came back quite nicely. It hit the 14-period moving average. It's up 0.08 at 25.35, really holding well. Gold might even have come back a little bit more. Yeah, it's now only down 15 at 2004. I think that these are still in play, but we are in a digestive phase. Just think of it as a digestive phase. If you're long, say, the GDX from much lower down, say in the 31s, maybe even the 32s, so far, you just have to manage the very short-term moves. It's made a peak E. It looks like it wants to pull back. The 9 is still way above the 14, so it's a process. Unless it's a tremendous smash below 32, that'll get the 9 under the 14. The MACD's gone down, and stochastics now at 69, unbalanced volumes pulling back, relative strengths pulling back, everything's pulling back, but the price itself is dictated by this 9 over the 14 as far as I'm concerned. And that's just saying it's a slower move to the downside thus far, and until it crosses negative, and it'll cross negative if the we've got a fib number there, but I'll go below the fib. If 3280 gets taken out, you'll probably see that go down, and then the GDX, the gold minus, could go lower. That TLT looks like it wants another move downtown. Yes, let's just do this, because what I'm looking at here is that the arch formation in the rectangle pattern under the 200-period moving average in the daily is showing that in this case the 9 has crossed negative. So that's weakness. The MACD is weak. The stochastic's weak. So I'm just looking at this and I'm saying that yields could go higher, but you've got all this way down to the 99s in the rectangle formation. So that's a big ask to say, can it go back to the 200-period moving average of 108? I think at this particular point, the trend is more higher highs, lower highs and lower lows. And if you want to just put it into context, let me go to the Dow just for the moment, because we're talking about apples to apples, which means you're talking about 9-period over the 14. You can see that here the Dow is expand a little bit. I got a feeling this Goldman, you remember Goldman Sachs right over here, somewhere I think it was over here in March, Goldman had this huge day, and because of that, the Dow went down much lower than the S&P and the Qs. Goldman Sachs, I think, is also affecting it right now. But Goldman Sachs had a pullback intraday yesterday, and it's come back. So I'm watching this closely. So this is the financial. So this is what I want you to do. Had a bunch of questions about the XLF. XLF is actually holding really well. Normally, if the XLF, the financials are holding well, I'd be looking at yields probably going a little higher, and I'd be looking at the market probably pulling back. So that's sort of what we've got. So within that context, the IAI, which is in the financials, this is the dealer broker index, is up 22 ticks at 93.16. That's pretty good action. Now I had a question that said, so Basil, what about Schwab? Has it done what you discussed with that oversold, overbought thing that you spoke about? Thank you very much. Okay. Schwab, SCHW, is trading up $1.49 to 55.48. So I have a rule that I developed a long time ago, but I've really over the last 2 years made it more a real. It's not a rule of thumb. It's really a rule in the Chapman methodology. When you get an explosive move to the downside with a gap, and there's a high turnaround, huge volume, there could be a turnaround for 28.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So we're looking at Schwab, but I'll be back there in a second. I just need to do this because I had a couple of questions come in. Is this a 2-click session? Now, I've made a big deal about that over the last year. We have had so many times where if you got the low of the morning, that could be at 6:30, it could be at 8:30, it could be at 9:30, you could click once and sit there until late afternoon, sometimes even until the close, as the 10-minute went positive at a peak A, then a B, and then a C, and then a D. We saw that, in fact, wasn't it yesterday as well, we got to a D, but there was not a 2-click session. We went to all that way to that F, that was made at 9 o'clock in the morning of whatever. Then I mean, time flies when you're having fun. Let's see. That was on the right there. That was at 8:40 on the 18th, so yesterday morning, and then it plunged down. That was 1-click session to the upside, 2-click to the upside, then a 2-click down to that trough D, and then it did go to a D, but that was a tough one. And then what happened, and yesterday I was talking about, I said to the den, made a peak C, and then I had to leave, but it still looked very good. Look, the 9 period didn't cross negative, even though the price came down. And then all of a sudden, pop, it goes to a D at 41.80, about 83, and then comes down. So now the question is this a 2-click session? If you were lucky enough to get in at 41.53 and you survived through 10.20 this morning, it's now 10:31, I'd say now you should put in a stop, maybe at it's only 10 points, 41.53 to 12 points to 41.65. But I would put a stop in at 41.60. You take that out, there's a good chance we're coming down again. But so far, this is just not the action that you would get at a peak D, when a peak D in the Dow and a potential peak F in the S&P said, oh my, this is where you get the major move down. What would happen is that you get within 2 days, that was yesterday, not today. Monday was like Tuesday. Oh, today. You would get at least a minus 380 to minus 410 in the Dow, S&P down 65 to 75. That's what you'd get. This is not it. This is saying it's a process. If there is going to be a turn down, we could even recycle higher. That's the reason why I say to subscribers, this is what we're going to do. We're going to take a short position, but we're still going to keep the long position. One will cancel out the other just for the day or so, and then we'll see what's left. But at this particular point, I'm kind of inclined to, there we are, we saw leg D, 200 period moving average of 41.69, we're at 41.67. So we're going to be watching this closely. So I would say yes, and I was going to also say that there's a chance it's a 2-click session, because if this afternoon after 1:30, the Dow is actually back down to 145, minus 140, I'd say 170 or more, and the S&P is back down to minus 19, minus 23, then you've got yourself an arch pattern, which says, whoops, watching the downside. And the reason why I brought this up is, and saying it's a process, look, Schwab, when it made that on the 13th, where is it? It's on the 13th of March at 45 round number low, it gapped down after gapping down 4 days before, and then it had a huge red candle, then another red candle, and then it had this huge candle, and the volume was massive. And then you got your reversal with a gap up the next day. I'd said the very next day, I said, I believe that this is Chapman wave price volume climax low. And that if this is correct, we should take 28 sessions to see whether or not it breaks the 45 low. It shouldn't do that in this particular process. And if it closes on the 28th day above, and sharply above the gap, the bar that made the gap low, and that would be 53, I think it was 54.90, and we're trading at 55.58 right now. I said that's going to be really good action. And if in the next 28 days, that's 56, I usually say 52, but 56 sessions, you could have another move for 56 days or 52 days, if that low has not taken out. But we've got another, what is today? 21, 22, 23, 24, 25, 26. This is a 26th day since that low, and it's 45 was the low, and it's trading at 55. It's 10 points higher. So that's a good sign. Together with the XLF, together with, let me look at Bank of America. I said I'd look at that. Bank of America is down today, but it is off the low of 26.32. I think the technicals are starting to firm up a little bit. So this is a process. Now, I'd be remiss in saying to you, if the financials really move much higher, you should get a pretty decent move in the market, because there is a change in the whole context of the market. Look at this. AAP is advanced auto parts. Look at that massive move from the 240s down to the 115-ish area, and now it's at 127. Look at that horrible, it's almost like the pyramid, straight up and then straight down like a stretched out Eiffel Tower. But wait a minute, AZO, same category, Advanced Auto Parts, and now we're going to AZO, which is AutoZone Inc., at an all-time high. I believe it's an all-time high. As we're speaking, it's a day off the all-time high at 2,679.78, down $1.87. Yesterday it was 2,691.99. Leg C. What a fantastic! So within each group, you've got this bifurcation, just an unbelievable differentiation between what's working and what's not, even in the same sectors. So AutoZone, look at this, fantastic. I drew this in some time ago. Let me just show you this trend line. Look at this. It looks like Ulta Beauty. Every time it has just a brief couple of months of rest, and then it makes a new high. A few months of rest, making high highs, higher lows. It's done that right now. It's in the Chapman Wave Inside Track repellent zone. And this is what I'm talking about when I say, look, if there was a really bad recession, then new cars would be a problem. But even old cars have a problem, or let's call them used. Remember, it used to be old cars or used cars. Now it's called pre-owned cars. And if you're looking at it this way, there is money out there. In fact, there is. If you look at all the ball games and you look at what people are paying for tickets, and you look at the way these stadiums are actually full, I have to tell you this. There is money out there that is being used that is not people. These are not people that are worrying about the rent, or maybe they're worrying about the rent, but they're still spending money. So, and that says to me that this is a very different environment. Wait a minute, Orly, this is O'Reilly Automotive, all-time high yesterday as well. A leg D, massive move from under 800 in the 790s to 908 in a month, just over a month. Isn't that something's going on? So let's just get back to the story. We're looking at the Schwab. Schwab is telling us people are out there buying stocks, and that's why it's held up so well so far. Hasn't gone back to test the low of 45. Is it a fantastic buy? I would say at 56.81. In this particular environment right now, I'd probably say as long as it holds 52, that's 3 points, almost 4 points. 4 points on a $55. To me, that's just too deep a pullback. But if you are looking at it as a buy, I would say you could start your position right here at 55.81. Be aware, though, that this rectangle formation could keep you contained in the rectangle for quite a while. I'll be back. The Dow's down 103, S&P's down 11. And then there were other questions that I had, and I'll get, America, AA, okay.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Let me just finish this. I promised some people that I would try to do this during the show because they are studying the Chapman Wave methodology. And this is where I drew the Chapman Wave inside wedge target repellent zone line, and it hit it exactly right there. And it says if this is still to rally, that by the 4174, let's call it 7173s in the E-mini, should be hit at noon. By noon, we should try to get there if this continues to rally as it is. All right, enough with that. Oh, and key support is 4162 at this particular point. So Alcoa. So one of the reasons why I have a problem with a stock that trades in a rectangle formation for a long time is that very often that rectangle formation, as long as the left side low is not taken out and held, it can be taken out, but it mustn't be held. It says that rallies will fail before making a high above the previous arch high, in this case 42.94. We're looking at Alcoa trading at 41.67, down 48 cents today. The most important thing I can talk about right now in terms of this particular stock is that it had a huge move to the, it had a peak A, then a peak B, and a C in the weekly chart that failed at the previous high of peak B minus, which was in the week of the 26th of August, I believe. Yeah, 58.24. It got to 57 something, 761 the week of the 20th of January, and now it's arched over. That's number one. Number two is, so it's making the arch, and now the 9 is still sharply below the 14 in the weekly chart, and the monthly chart looks very much like a dreaded H pattern. And that goes to Alcoa. This is in PAVE. This is what we once had, but we don't have it anymore. I'm waiting now to get back into this at some point. PAVE is the Global X U.S. Infrastructure Development ETF. And you can see it's got the same pattern here, that is stuck in this range. It's making almost the H pattern, the dreaded H pattern. What's the dreaded H pattern? Let me just quickly show you. I'll do this as many times as I need to. For those of you who are new to my work, this is the pattern that I'm looking at. I always look at three major trends: straight line up, straight line down, 1. Cup formation or a V-shaped formation, 2. Arch formation, 3. Or a mix of 1 and 2 and 1 and 3. This is a 1 and 3, dreaded H. If it fails at a peak A or B and takes it out, takes out the left side low, that can go a lot lower. If it holds, it can go to an H that goes to a lowercase M-shaped formation. So what are we looking at here? We're looking at an H, took out the left side low, and then a bigger one that came back, held above it. So that's a kind of a positive, but it really is stuck. So PAVE says, have a look at Alcoa, have a look at, these are all infrastructure stocks. Look at Caterpillar. Caterpillar, same thing, same action. Look at Deere. same action. Look at CX, which is CMEX Corporation. Now that had a fabulous move. Wait a minute. Mexican cement company. You know how I'm talking about the bifurcation that within one sector you can get some stocks. We just saw that, how AAP was acting so badly in the same sector as, so that was auto parts, and advanced auto parts was doing fabulously, all-time high, and Orly. So here we go. So this is a sign to say there's some kind of something going on here, and it's very selective when you get CMEX trading at down a penny today, but at 592, just a month and a half ago, it was down in the 460s. So I'm saying to you, I have a problem with Alcoa. Oh, X is the one I want to look at. Yeah, is X, which is U.S. Steel, acting a little bit better because it's making peak A, pulls back, peak B, double top, pulls back, C and D. But it's made a peak D in this convoluted struggle to the upside. I have to tell you, I don't see it just yet. And that says still be somewhat cautious, because in this particular phase that we're in right now, I'm looking at the Dow, the S&P, and the Qs and the SMHs. I have to include this. I know the question was Alcoa. I'm trying to put the package together to say, what would make Alcoa work? Well, the semiconductors usually lead the market up and they lead the market down. And right now, since it made the high back of maybe April the 2nd or so in the 360s, you're looking at 249, again down today, -3. So I'm just saying, I'm a little cautious right now. And we've taken steps in the Chapman methodology and for subscribers to my opening call to deal with that. And because of it, I'm saying that something like an Alcoa, I would wait on. That was just a long way of saying wait, but I needed to explain why and to put it into the context. Now, if Alcoa actually starts to trade, instead of sliding back down under 40, it's at 41.40 right now, closing under 40 for 2 sessions, which would say, back in the lower part of the range. If it actually closes at 42.53, about a point or so up from here, I would say, you know what, it's working its way to the upside. And if it can actually get to the 50-period moving average just under 44, then maybe the weekly chart will start to improve a little bit. But the flat stochastic at 11% in the weekly says, no, it needs a lot more to really impress me. So I'm just going to say, I know the person asking the question has a longer term outlook. They're prepared to put up with some pullback, not much, but some pullback. And I'm just saying, if you've done your homework and you like Alcoa and you're looking for where's the entrance, I'd say if it was going to work at all at 41.44 right now, I would just start my position, but I would absolutely have a 1.5 point stop at this particular level. And then I'd have to do it all over again. If you're asking me what would I do, I'd wait. It's as simple as that. Everybody has their own way of looking at it. Another question came in. Could you look at ISRG, Intuitive Surgical? Wow, it's gone even higher than I saw this morning. It's in a huge leg D to the upside of 35 at 304.55. Leg D in the weekly chart. Now remember, I always say if you go to a peak C, and then you pull back and you produce this particular pattern. I forgot to draw it in. I saw it, but I didn't draw it in so that you could see it. If you've got this lower lows and lower highs in a very concerted, tiny channel to the downside, when you break out from that channel, if the 9-period then crosses the 14-period, you can have a really nice rally. It's almost like a falling axe formation, except in this case, it's just a very narrow move to the downside. It's more like parallel lines, but it has the same effect as the falling axe formation, and this is a breakout. Leg B in the monthly Intuitive Surgical, and that's what I'm saying. Be very selective. Don't be so afraid that you can't do anything. I'm trying my best for subscribers to say, don't be afraid. We've taken profits and things that have moved very well. Someone asked me about SYM. This is Symbiotic Inc., end-to-end AI, artificial intelligence, robotic warehouse automation systems. We're in it from right here in the 21s. It screened up to 30. I think it actually went 30. Yeah, 30.29, 4 sessions ago. Now it's digesting those gains. And I said, I think this could become a meme stock. In other words, as people become recognizing how beautifully it's done, it did everything we wanted. The Chapman inside wedge, target, resistance line, the left side, right side, price, time match, the cup formation. These are all things I teach and I show my subscribers as we're doing them. And it went to a peak. Well, we don't know. The week's not over yet. But that 30.29 high. So I'd say keep this on your list. Now it's just digesting gains. I'll be back in a moment. Dow's down 91, S&P's down 10.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Yes, I had a question about PPLT, but I've got platinum right here, the continuous contract, and the left side high that was at on the 11th of January this year at the continuous 1,125.50. We are now just a little under it. We're at 1,107. And it's taking a little bit. I chose that there as the left side, right side price time match. I should have done that again. I'll do that again. So sometimes you have to use not the plumb line at the bottom on a cup or an arch at the top. You have to just do it because you got to move it sideways because it's just not going to make it, or it's going to be too short or too long. In this particular case, I'm doing that, and it says that on the daily chart by the 25th. 25th will be by Wednesday a week. It should make that high. So this is looking fabulous right now. So just as I'm about to go out, because I have to be out from about noon or so today, I'm just going to do this. If the Dow, this is still young in the day. This is the third part of the day actually coming up. So AQST, okay, I'll do this real quickly. AQST, let me just do this at a request. Yeah, I don't know what it is, but 1.18 is the support. It's a 1.36 peak A, peak B. Oh, this is a very good action. Yes, very nice. Let me get back. So you see the VIX index right now trading down, even lower, down the 16.58 area. If the VIX late after 1:30 or 2:10 this afternoon, if the Dow is able to only be down, I'd say to subscribers, if it's down very little, we could even have an attempt to go positive. But if it's down more than about 130, I think it would be a weak close. And most importantly, the VIX index, if the VIX index is down 30 cents, if suddenly it starts to rally to 17.10, you'll see a late sell-in. I think this is choppy action is to test the strength. And stay tuned for Steve Rhodes. Don't forget the webinar tonight with Teddy, and I'll be back tomorrow. Have a wonderful day. Check out my opening call.